So we've had a crazy weekend so far with shooting down spy balloons and shifting market sentiment. I want to share my thoughts and get yours as well. So let's get into it. Hi friends, welcome back to the channel. And this is your daily news. So let's start with this. Kramer, he says, take advantage of the bull market by selling some shares. And then you have Elon Musk, Michael Burry, and Jeremy Gratham warn stocks may slump and the economy could suffer. And then you have Larry Summers saying, maybe soft landing, more possible than a few months ago. It is a very, very crazy market to read because, you have conflicting reports and you also have to the extremes. And this is sort of sums it up right here in this headline. Investors can fight the Fed all they want. Don't fight the tape. So basically the gist of it is typically the market will follow whatever the Fed set interest rate at. However, even though the Fed keeps raising interest rates, like the market just keeps like going up and it's just like really, really weird. One of the things I will say though is that I feel like we're still in an unhealthy market. And the reason why I say that is you get these wild moves in stocks. So for example, Amazon, which is a $1 trillion company, you can see this, the chart here, it's down like 8.5% basically, and another 0.5% in after hours, so like 9% in a day, which is crazy for like this size of company. And then you get, again, talking about, say, size of company, Tesla had an amazing month. I mean, true story, amazing month. I'm not a Tesla bull, but I can read numbers and I want you guys to see, oh my God, 72% in a month, which is just unreal. And so this signals to me an unhealthy market. Stocks usually don't do this, especially like the size of these types of companies. Where could we be going? Like I said, we have experts saying different things. You also have shifting market sentiments because you have the tape, meaning sort of like what is the price of stocks. And then again, you also have the Fed, essentially, what is the cost of money? Now, if you take a look at this, so this is the S&P, and if you see the sort of the trends, either both to the downside or to the upside, this would suggest, right, if you are following the upward channel, then that you may hit a ceiling at, say, 4,400, talking about the S&P, and then maybe go back down, something like that. Because this is suggesting that the line right there was around 4,000, which is sort of what everyone was watching, was sort of the, is the bottom going to be 3,600? Is the top going to be 4,000? That kind of thing. This is something that we always say, don't fight the tape. Well, like, see, everyone wants to buy stocks, and therefore we're buying stocks. And that was sort of the bubble market economy before, where like valuation didn't really make a lot of sense, but everything kept going up. I just don't feel like that we're going to be in that crazy bull market again. That's just my opinion on that, because the cost of money, is much higher than it was before. We don't have 0% funding. And also too, we're in the quantitative tightening realm, not in quantitative easing. The one thing that the market is betting on, though, is that the Fed's going to be cutting rates. I don't see it because the Fed doesn't say that they're going to do it, and they usually do what they say. However, I want to show you a chart here, which is sort of like gives you sort of an idea of what things have happened in the past. Now, the one of the keys to understanding money, markets, etc., is just always know that past performance does not guarantee future performance, right? Future results. So you don't know for sure because everything could be different. Now, with that said, it's not that you're completely uninformed. That's why I want you guys just to take a look at this stuff for yourself. This shows two different types of bear markets. So some where there is a recession and some when there's not a recession. So currently where we are now, from say January to October of this year, if that indeed was, the end of the bear market, just for example, that would have been 9 months, which is very, very short, in fact. It's kind of funny because you look at 2020 and that was like a, 1 month dip of 34%. The 9 month one that we just had was 25%. But say other periods like in the 70s, you may have a 48% decline in the market, and that took like 21 months, right? So we could just be halfway through if we're talking about something like that. If we're talking about something like the dot-com bubble, which I sort of feel like that we're in, that took 31 months, right? Again, no one knows for sure, but I'm just showing you averages so you have a general gist of it. And I always have the same advice for this kind of stuff. When it was last month, and some of the basically the bulls and the people on YouTube that just tell you to buy no matter what, yes, they were totally right this month. I was just basically saying, if you're interested in stocks, at least you're not at the top, and also manage your risk. So that was my advice on that, and I always stick with the same kind of advice: manage your risk. So do what's appropriate for you. Also too, if you say, look at the other chart here, bear markets without a recession. So these are much shorter. These would be 6 months, 8 months, and 3 months. And so that's sort of where the question is right now is, are we going to avoid a recession? If we do avoid a recession, then yes, a bear market would be very, very short, right, in comparison if we end up having a recession, which I'm kind of leaning towards, but I can't read future 100. I just tell you sort of what to look for. Then it would be much longer, the bear market. Now, the basic gist of it is essentially you're looking at, are companies still making money? Okay, that's the basic gist of what it is. And so, when you invest in a company, essentially what a stock is like, okay, does a company make money or not? And what's their projected earnings in the future? And also, too, how does that relate to my other choices of where I could put my money? I could be paying off debt that has high interest, or I could just be putting it in CDs. I could just put it basically in a savings account. And in these days, just your basic savings account paying like 4%, which is really good. So essentially what it is like, if you're going to put your money in the market, then you need to get above 4%. If you can't get above 4% of the market, just stick your money in a savings account and you're going to be totally fine. Now, with that said, it's interesting because before people were piling into bonds, because basically this is a balancing act. As the price of, say, bonds go down, then the yields go up, right? It's inversely related. And one thing that was happening as well is companies were trying to essentially attract investors by issuing corporate bonds. And so yields are pretty good. And then when everyone starts buying said things, then the yields start going down. And then again, the balance reshifts. And so one of the things that is also going on as well is people keep betting on, okay, so what's the Fed going to do? And again, I emphasized this to you guys before. It's all about sort of putting your money where you think it's going to perform best, right? It's going to be bonds, it's going to be stocks, savings accounts, et cetera. And the equation always changes, especially when the Fed keeps raising rates, right? So it sort of changes the calculations that you're making on where you're going to get the best return. Now, according to the market, as of February 3rd, the market is betting there's going to be a couple more rate hikes. I think they're thinking like 25% rate hikes, that kind of thing, or 25 basis points to say 0.25%. So there's like a half, like a 50-some% chance that that's going to happen. My feeling is this is just from the Fed's personal, like sort of what they say. They basically say, hey guys, we're going to raise rates, so we're going to keep it elevated, and we're probably not going to cut to the end of the year. That's literally what they say. So I think that's a safe bet of what the markets are saying. And so then the question always becomes like, is the price of stocks already priced in? One of the things I would say is that whatever stock that you're in or whatever, is just take a look at the valuation, meaning that how much are you valuing the company and what are their P/E ratios? What are you pricing the stock based on how much you think the company's going to earn? And does that make sense? And generally speaking, you want to balance your growth rate, meaning that you want a growth rate that is greater than your P of the stock. I mentioned that several times. And so this is sort of why I always say like Tesla's overvalued. I just use the example of Tesla. When it has a P of like 50, this is your earnings growth. It just doesn't make sense that they're going to be growing at an earnings growth. I have to mention earnings because yes, you can grow in your sales and stuff like that. You can grow in your deliveries, but if you're not making any money on said cars, you're not actually making any money, right? You guys understand what I'm saying. Also too, going on in the markets as well. This is an interesting one is the big tech companies are buying up AI companies. Now I mentioned this before, and we've already started to see it happening to where when the markets do sink in these kind of things, you'll get some stocks. So I'll just give you examples. So say like Robinhood or like a Peloton. There's always been rumors that, maybe like an Apple would buy a Peloton. That would be an interesting buy for them. Or for example, say with Robinhood, there's been rumors like, JP Morgan might be coming in or Goldman coming in by Robinhood. That would be a good, interesting one. Or another example would be something like a DraftKings. Would Google come in and buy DraftKings, which would also be an interesting purchase. So as it turns out, AI, so all these like smaller AI companies will likely get bought up by the big ones. So be it your Google, your Microsoft, your Amazon, Apple may get in that thing as well. And so this is sort of the stuff that you'll see where if a company, talking about the smaller ones, has some sort of value when that stock dips quite a bit, you may see purchases. Another example as well as there's always been talk that Amazon would be buying like a Jumia, which would be in Africa. Theoretically, they could be buying a Coupang here in Korea, any number of things. So that kind of stuff, it's hard to predict. And frankly, if you know that information, that's inside info, and you're probably doing really, really well, and it's kind of the secrets, and you're not sharing those secrets with everyone else. But we probably will see more purchases as the price of some of these smaller companies and stocks have gone down. Speaking of going down, it's interesting, that tax cut, or I should say tax credit, I should say, that the government's giving for EVs, which is essentially like $7,500 a car. And basically what they did, they're changing the definition of what an EV is / car, and also made it possible for many Teslas now, essentially under $80,000 to qualify for said credit. I was reading through this, and evidently this tax credit is a pretty big news because it could last like 10 years and essentially give a lot of benefits to electric vehicles. Now, however, this is the current sort of sales of cars in sort of the EV sector. Tesla is clearly a leader right now. And so, guys, I just show you numbers, and I'm fine talking about numbers. However, one of the things that I don't like about the Tesla bulls is they just always act like other car companies don't exist. I think that's a big fallacy. And, especially like this, for example, this particular chart, you have Hyundai, Kia, Ford, Chevy, and Volkswagen is on this list as well. And there's going to be others coming. And yes, I get it. Tesla's the leader now, but I just don't see them dominating the market forever because, to be perfectly frank, I've been in many different cars. I'm just not a huge fan of the Tesla. I'm sure some people do love it and they think I'm thinking talking sacrilege, but I do believe that there are other brands exist and people have a right to decide, and we'll see what the market says. Especially when new, I'm telling you guys, when like that new BMWs or new Hondas or Toyotas come out, popular brands, there's a lot of different cars in the world. Now, speaking of brands, this was an interesting one. Apple, I guess they were talking to essentially the big money and saying, whether or not they're going to be releasing a more expensive phone. They would call that the Ultra model. The gist of it is like, could Apple charge for like a $2,000 phone? I think their highest priced phones right now is like, in the $1,500, $1,600 range, which is quite a lot of money for a phone, for something that you can drop and break. And full disclosure, I have dropped phones before, broken the screen, once or twice in these things. I'm sure you guys have done the same as well. And, I just don't want to spend a ton of money on something that's going to be replaced in a couple of years and easily broken or easily lost, that kind of stuff. But Tim Cook seems to think that people will be in the market for a premium phone. Now, this is my personal thoughts on this stuff. I'm all about the iPhones. However, my favorite phone of all time, I will show you right here, was the Motorola Razr. I love this phone. This is my favorite phone of all time. I wish I could get an iPhone in this type of design. I miss the physical buttons. Unfortunately, I don't think we're ever going to go back to physical buttons. I personally really like physical buttons. Also, too, I just like how small it is, and I hate how phones are so big these days. It's just ludicrous. Now, Motorola did make, and I don't promote anything, I'm just telling you my personal opinion. Motorola did make an update to the Motorola Razr. It was a pretty cool design, but really frank, it's just way too expensive. And this goes back to, I was thinking about the Apple thing is that if I'm going to pay, $1,500 for a phone, I'm probably just going to get an iPhone because it's just a better design, a better UI, and et cetera, et cetera, et cetera. So if we can figure out a way to convince Apple to make me a Razr, I will be really, really happy. So that's all I have to say about that, and we'll see what they announce. Regarding the whole spy balloon stuff, I read a couple different articles on that. It's hard to say what's going to happen, to be further frank. It's hard to say. Obviously, the Americans, shot this thing down. It was a big political theater, and Biden come out and say, "Hey, everyone, we're tough on China. We're shooting down balloons." I know it sounds ridiculous. And then the Republicans say, "Oh, Biden's weak because he could have shot the balloon much earlier. You're such a fool, Biden," that kind of stuff. So you'll hear a lot of political posturing in this thing. And me, as just a regular American citizen, I'm not that particularly concerned about a balloon flying overhead. That's just me. However, someone asked the interesting question of why do we use an F-22 on this thing? And I have a couple different answers for this. So the first one, which I want to mention, is that F-22s are freaking expensive. They are. They're really, really expensive. And Lockheed Martin makes these things. I've always been bullish on Lockheed Stark. I mentioned to you guys last year. And just these kind of companies, they're always going to make money because it's just Americans sell weapons everywhere. So one of the things that you can do when you're using the F-22 to shoot down a balloon is you're basically advertising to other countries around the world. If China's going to spy on you with balloons, get this plane. It will shoot down balloons for you. Now, the cost of the Lockheed, which is really interesting, I looked it up. It is all over the map. So some estimates say it's like $100 million for one. Some estimates say it's $300 million for one. The reason why the estimates are all over the map is because it depends. Are you including development costs or not? It's very, very expensive to make this thing. And also, too, I guess the missile that they used to shoot down the balloon was a Sidewinder. That thing cost $600,000. Not only do you have the cost of said plane and said missile, you also have like flight time, and it could be anywhere from like $100,000 to $200,000 an hour to fly these things. So these are really expensive stuff. And I just want to mention to you is that there's a lot of money in the defense industry, and I don't see that changing anytime soon. Now, regarding U.S.-China relations, this was an interesting thing. This chart here, even though there's a lot of tough talk between U.S. and China, this shows sort of the trade relations between the two countries. And as you can see, it's just been growing up and it still continues to grow. Now, are we growing at a fast rate like we did in the past in terms of trade with China? You can clearly see no, it's certainly starting to slow, but the volume is still there. So, whatever happens with U.S.-China relations, who knows, but the money is still there, and I'm sure a lot of companies on both sides would be irritated if the markets were closed to both countries. So we'll see. Regarding markets and things closed to both countries, this was a really funny story. I saw this just an hour ago. I guess someone left some luggage in the Detroit airport, and the customs agents found a dolphin skull. So, what? So evidently, and this is something that we've talked about before, the market for like smuggling, animals and animal parts and like, I guess this kind of stuff is a big market. And so this is probably worth a decent amount of money. I myself have never tried to put a dolphin skull in my luggage. I don't recommend it, but this is what they found. And it's actually funny because it reminded me of the funniest story that we read last year. And I'll share it again because it's just so funny. There was a guy who was convicted. I think he was crossing from Canada into New York, and he was smuggling, true story, pythons in his pants. So I had to bring up the story again. I thought about the dolphin skull, and I immediately thought of the guy who's smuggling pythons in his pants, and it's a true story. I was convicted of this thing. So that's sort of the lessons I have for you guys today is, regarding markets, manage your risk. Regarding animal smuggling, also manage your risk as well. Don't try to smuggle too many pythons, and sort of diversify your smuggling needs. So anyway, that's all I have for you guys today. Love to hear your thoughts on any of these things, and I'll catch you in the next video.